Hello, financial accounting. I would like to review problems 4-9A. We're doing the general journal, so what you'll notice is that I have the title. Don't get sloppy. It is very important always to title what you're doing. Notice that we are working on page 1. And now we have post-reference numbers. These are the account numbers. So if you look at page 118, you'll see a chart of accounts, and that's where I am getting these reference numbers. Cash is always the 101 account, and so forth. So make sure you refer back to page 118 so you can see which accounts and where I'm getting the numbers from. First, on January 1st, we have invested cash in the business. So cash, first, we have to make sure we write the date, the description, cash, and the debit amount of $10,000 because we are increasing our cash because we are depositing it into our account. And then we have the capital account, which is the credit account. And we have to write something to tell us what this transaction is. It's the original investment in the business. Next, we have rent paid. We know that that's rent expense. We know that we're going to increase our rent expense, and we're going to decrease cash. And we've paid our rent. On January 2nd, we purchased office supplies on account. When we see that word on account, we know that it's an accounts payable. So we increased our asset by $300. We also increased our accounts payable by $300. Remember that we have debits and credits. Debits are always listed first. On January 1st, we purchased office equipment on account. Again, on account, accounts payable. So we have office equipment, debit, $1,500, accounts payable, credit, $1,500. On January 6th, we received cash for services rendered for $580. Cash is being increased, debited. Consultation fees is being credited, $580, and earned consultation fees. Make sure you're paying attention that I am always writing down the date, writing down the amount, listing the accounts, which really should happen when we're posting to our journal, and always writing a description. 6 months from now, someone's going to look and say, what is this? And we're really not going to remember. I wouldn't. Next, we have a telephone bill. Paid telephone bill. If we're just paying it, that means we're paying with cash. Telephone expense and cash. And we write paid telephone bill. We have utilities expense because we're paying the bill. We're debiting the utilities for $38 and crediting cash. Received cash for services. Cash and consultation fees, and again, earned consultation fees. We continue January 12th, made payment on account. We have accounts payable. Remember back before on those 2 transactions when we bought office supplies and equipment? Well, now we have to pay them. We're going to pay $50. So we're going to reduce our liability, and we're going to reduce our cash, and we paid on account. Transportation expense on January 13th. Paid for a car rental while visiting an out-of-town client. Transportation expense, they tell us, $150. Paid for car rental, because we're not going to remember. Always make sure you put some type of description here. Wages expense, our employees like getting paid. So January 15th, paid part-time worker, $360. People like getting paid in cash, $360. Received cash for services rendered, more consulting fees, but this time cash. Cash, earned consulting fees. Now, the owner would like to have a little extra money. So we have the drawing account, $100, owner's withdrawal. January 20th, paid for a newspaper ad. We have to advertise it, advertising expense, and cash. Paid for newspaper ad. Transportation expense. Again, now we're paying for a cab fare. See, without even reading what it is, I know. So it says reimburse part-time employee for cab fare incurred delivering materials to clients. Transportation expense, $35. Paid for books on consulting practices, miscellaneous expenses. We need to know, maybe right terminology, who knows? But we purchased books for $28. Again, on the 25th, we received cash for services rendered of $320. We earned cash. We have more money, so we're paying down our liability, accounts payable, and cash for $150, paid on account. Paid part-time worker. They get paid twice a month. It's the end of the month now. Wages expense, cash, paid employee for $360. Received cash for services rendered, $180. Again, consulting fees, $180. Now the next thing that we do, now that we have our general journal, is going to be to journalize our transactions. Meet me at the next video.